Well, folks, the death of Tesla has been greatly exaggerated, and Elon Musk and the Tesla team come out of the coffin, kind of like the Undertaker back in the day, and just said some shocking things, posted some shocking numbers that even people that are naysayers on the stock, short sellers on the stock, even those folks, I'm watching them say, oh gosh, like that's pretty darn impressive. Like we don't even know what to say bad about this one now at this point in time. Here's around a 4-year chart of Tesla stock. The stock has done about a whole lot of nothing for the past 4 years, right? And I think Elon Musk and the team, I think sometimes they thrive in this sort of environment. They love being the underdog. They love being counted out. And if you look at the stock for the past 4 years, it's certainly a stock that's been counted out. The market's been tremendous the past 4 years. The NASDAQ's done tremendous, right? A lot of Tesla's peers in the stock market, a lot of the other big tech companies have done tremendous. Meanwhile, Tesla hasn't done anything for 4 years now at this point in time, and it's still down a massive amount from the peak it reached back in 2021, right? Now, I gotta say, the past year has reminded me a lot of the good old days in regards to Tesla. This was 2018, 2019. This was before people like me made life-changing money in regards to this one, right? And I obviously sold most of my shares at the end of 2020 going into 2021. I have 1,300 shares and I have a little bit of shares in other portfolios, but I sold the majority of my shares and I made life-changing money in the stock, right? But prior to folks like me making life-changing money, you gotta understand, the stock sucked in the worst way for 5 to 6 years. Literally, that stock went nowhere. I was fortunate that I got in at the right time, and the stock made an absolutely insane move, and I made ridiculous sums of money back then. But you got to understand, the stock sucked for a long, long time, which is very similar to what we have going on, where this stock has honestly sucked for a long, long time now at this point in time, right? Well, things are changing, and they're changing rapidly in regards to Tesla. In this video, first thing we need to go through is some shocking statements Elon Musk made on that conference call that matter significantly for Tesla's future and completely change a lot. Okay, so we're going to speak about that. Then we're going to some shocking numbers. Like I said, some of these numbers that even the bears and the short sellers are like, gosh, dang, man, I don't even know what to say about this. This is how'd they do that? That's what they're kind of like, how'd they do that, right? Third thing we're going to get into, what do you do with Tesla stock now, right? Stock's up massively after hours. Probably going to be a lot of momentum coming into this one, a lot of excitement coming into the stock. What do you do with it now? I need one favor, and one favor only for you guys. One favor, smash that like button. Hit that like button. Hit it like a fairy. I don't care how you do it. Just get the job done, please. That's all I ask from you. If you want to be subscribed to the channel, maybe you can be the 740, we're about to hit 743,000 subscribers, so maybe you'll be the 743. We'll see, okay? Appreciate y'all for being here as always. If you want access to my private stock group, private Discord chat, all those sorts of things, private wealth group, pin comment down there to apply for access to all that, including all my library of premium courses and all my future courses as well, okay? Alrighty guys, so right off the bat here, let's go through some conference call highlights. These were Elon Musk. This is what he said. He said some meaningful things here, okay? Part one. First thing, he said no EV company is even profitable and no EV division is profitable that he knows of. I thought about it, and I thought about every single company that makes EVs in North America, certainly, right? Or in Europe, couldn't think of one. Couldn't think of one. If you know of one that is profitable outside of China, let me know. And by the way, I'm not even sure many of the Chinese companies are profitable. I think a lot of those companies are losing a fortune as well, just to be quite frank. But can you think of even one EV division or one EV company that's profitable outside of Tesla? In anywhere outside of China? I can't think of one. Not one, right? Tesla's the only one. That is special in itself. And sometimes we got to remember like how far ahead of the competition Tesla is, because I think sometimes people get confused on how far Tesla's really ahead of the competition. Like Tesla's making bank. Like we're going to go over the financials. They're making ridiculous profits even after the crazy amount of lowering the prices they did for like almost 2 years straight. Even after that, they still are making ridiculous profits and no one else is. They're all losing a fortune. That in itself should tell you how far ahead Tesla is. They're 5-10 years ahead of the competition. Number two, record Q3 for the company, despite a tough market, Elon Musk said, and he also said they made their 7 millionth vehicle, which is very exciting, right? It won't be long before Tesla hits 10 million vehicles made ever. Third thing he said the energy business is growing like a wildfire. It is. It's absolutely incredible. The energy business doesn't get talked about a lot. We get so caught up in a Model 3, Model Y. How much did those vehicles sell this month? How much did it sell in the quarter? Okay, what's the margin on those vehicles? We get so caught up in that, we forget about the energy business, which is a slow-growing giant. I shouldn't say slow-growing. It's actually a fast-growing, becoming a giant business, right? And so that business is insane growth. We'll look at the numbers in just a moment. Fourth thing is October 10th event, he said, went very smooth. They had no incidents, which I think is massive. And he said they had around 20 of the new robo-cars, right? Robo-taxis driving around. But additionally, they had a bunch of Model 3s and Model Ys that also had the full self-driving capabilities and had no issues. So that's great. Fifth thing is, first half of 2025, he says affordable vehicles coming out. I'll tell you what I think that affordable vehicle is going to be. There's a lot of theories about, is it a Model 3, stripped down, all those sorts of things. I'll tell you what I think it is, okay? He committed to that first half 2025. And people are like, why didn't they show off anything yet? Why not show off anything? Well, you could cannibalize sales from Model 3 if you showed off something right now, right? You might want to show it off closer to when you're actually going into production so then you don't hurt your sales numbers. Sixth thing is, he talked about 20 to 30% vehicle growth in 2025, which is what Elon Musk is projecting, which I can tell you, that's very, very, very good numbers. Like if we hit 20 to 30%, I'm going to be very happy as a Tesla shareholder. Like, let's go, baby. That's big time. Seventh thing he said, Cybercab is going to be volume production in 2026, he says. He believes they're going to make 2 to 4 million of those vehicles a year, which is an incredible number. Like, I wasn't thinking that big a production, but maybe we do go to that sort of production. But 2 to 4 million, like that's more vehicles than the whole entire company produces today. So that's to put you some thought into how big those numbers are when he's talking about 2 to 4 million of those made a year. That's an incredible number. Eighth thing is, he said the 4680 battery cell is rapidly approaching becoming the most competitive cell. He says it's close to being there. A lot of ideas on how to go well beyond that. The 4680 will be the most competitive, certainly in North America, he says. He says they are still going to buy cells from competitors. He says the company needs a lot of cells, and yeah, they do, especially if you're talking about hitting some of these numbers that Elon Musk and the team are going for. Yeah. Number 9, he says version 13 of FSD is going out very soon. Exciting in regards to that. He talks about basically 5 to 6x less interventions versus a previous version, which I think is massive. I think that's massive. Number 10, he talks about Q2 2025. The vehicle is going to be safer than a human in terms of the driving experience, right? I think that's massive for the company as well. And keep in mind, as somebody that's experienced FSD, it's not just about being safer, because I feel like, honestly, the FSD right now might honestly be safer than a lot of humans on the road, because we know how bad drivers are. And if anything, the FSD drives like a grandma. But that's my other big point. It's not just that it's going to be safer than humans. It's got to drive a little bit more natural. And so, it has to be able to understand things quicker, make judgment calls quicker, because, like I said, a lot of times when you have the FSD, it just drives like such a grandma. And you're like, come on, man, can we get this thing moving a little bit? Even if you have it in assertive mode, which I'll put in assertive mode, it still kind of drives like a grandma a little bit. 11th thing he says the far majority of humans don't even realize that a Tesla can drive itself, which is crazy to think when you're so involved in the Tesla community. When you own Teslas, you don't even think about like people don't know these things can drive themselves. So, but yeah, far majority of people don't understand Teslas can drive themselves. 12th thing he said a 30-day trial is free for customers each time they do a big upgrade, which, by the way, I noticed they gave me another free trial on my Model S Plaid out of nowhere. I just thought that was interesting. But yeah, he talked about each time they have a new major upgrade, they're going to be doing a 30-day trial for free, which my opinion is he just wants to collect a lot more data. Company just wants to collect a lot more data so they can improve the software even better and better. 13, using ride-hailing for Tesla employees in the Bay Area, he said, which is exciting. Right now, they have to have a safety driver inside the cars, right, for regulatory reasons likely. But yeah, using ride-hailing today for Tesla employees in the Bay Area, they said. 14, ride-hailing, he says, is going to be in California and Texas in 2025 expected. He said maybe some other states as well. He said California regulatory side, it moves a little slower. He said Texas might move faster in regards to that, so kind of doubling down on what he said at the October 10th event. 15, Tesla will become the most valuable company in the world by a long shot. He said he kind of ended his comments in regards to that, which, is kind of him tripling down, quadrupling down, 5x downing on Tesla becoming the most valuable company in the world by a long shot, he says, right? And we'll run some projections a little later on in this video and really get to show you like what we're looking at for Tesla over the coming years as far as where this company's net income, revenues are going, and those sorts of things, which is going to be pretty eye-opening for a lot of folks. Now, it was also something very interesting Elon Musk said in the Tesla conference call, right? He said in his Q3 conference call, he said, Tesla's hardest product to copy is going to be our Gigafactories. And I thought that was intriguing because I would naturally think like the Gigafactory would be the easiest thing to copy. Like I think about the vehicles, the technology, and then never mind the software. And I'm like, that's always seemed like that's going to be the hardest thing for other, competitors, if we even want to call them that, to try to copy from Tesla. But he basically said like the Gigafactory is the hardest thing. And so that was just mind blowing to me, and just gives me some more kind of insight on that. Tesla's competitive advantages are not just around its technology, right? Its hardware, its software, but additionally in regards to its Gigafactories. That's incredible to think about that, right? Now, they had some highlights here. Profitability, this is into part 2 now, talking numbers here, which there's some shocking numbers. Like I said, even the bears were looking at some of this and like, what? How did they do this, right? Well, I'll explain that. $2.7 billion in GAAP. This is generally accepted accounting principles. GAAP operating income in Q3. $2.2 billion in GAAP net income in Q3. $2.5 billion in non-GAAP net income in Q3. Operating cash flow of $6.3 billion in Q3? What? Free cash flow $2.7 billion, which is a crazy number because the amount of CapEx this company's spending on is insane. We know how many Nvidia chips they're buying. It's ridiculous, right? They increased their cash and investments by nearly $3 billion. That's insane. And that's on a quarter-over-quarter basis, by the way, right? Increased AI training compute by over 75% in the quarter. Cybertruck became the third best-selling EV in Q3 in the United States behind only Model Y and Model 3, so call them 3 for 3. Who's really running the game in the EV industry? It is Tesla. They're 3 for 3. They got the 3 best-selling EVs in the United States of America. How insane is that? And one of the reasons Rivian's starting to struggle bad is because Cybertruck's come online. And I knew that was going to be a problem for Rivian. As soon as that Cybertruck got out there, it's going to get tough. And that's exactly what we're seeing play out, right? Over 2 billion miles driven cumulative on full self-driving supervised as of Q3, with more than 50% on version 12. We delivered a strong results in Q3 with growth in vehicle deliveries both sequentially and year over year, resulting in record third quarter volumes. We also recognized our second highest quarter of regulatory credits revenue from other OEMs. That's exciting as well, right? They're making bank off all these regulatory credits from all these other companies. This is awesome. Our cost of goods sold, COGS per vehicle, came down to its lowest level ever at $35,100. In order to continue accelerating the world's transition to sustainable energy, we need to make EVs affordable for everyone. Abso-dang-lutely. The energy business achieved another strong quarter with record gross margin. Additionally, the Megafactory produced 200 megapacks in a week, and the Powerwall deployments reached a record for the second quarter in a row as we continue to ramp Powerwall 3. Despite sustained macroeconomic headwinds and others pulling back on EV investments, that's going to be a huge mistake long term. First off, these other auto manufacturers do not focus enough on EV investments for the longest time, right? Now they're pulling back on their EV investments. That's going to be a mess. We remain focused on expanding our vehicle and energy product lineup, and they have to pay the company all this EV credits, which just gives Tesla even bigger advantage. It's nuts, man. It's nuts. And others, reducing our costs, making critical investments in AI projects and production capacity. We believe these efforts will allow us to capitalize on ongoing transition in the transportation and energy sectors. Now, looking at this is kind of like a B plus kind of shrunk down income statement here. Total automotive revenues only up 2% year over year. Obviously, that's not the numbers we want to see long term from Tesla. It's very disappointing, but given how bad the business model had been in the last several quarters, we'll take 2%. Energy generation and storage revenue up 52% year over year. Services and other revenue, by the way, Tesla's going to have easy comps in 2025. Keep that in mind, easy comps in 2025. Services and other revenue was up 29% for the company. So we can see where the major growth is for this company. It's in energy generation and storage revenue, in services and other revenue. But the exciting thing is, this automotive revenues is going to start coming back to life in a major way in 2025, right? So, bam, that's exciting. Total revenues up 8% for the company year over year. Total gross profit 20% up year over year. Total GAAP gross margin up 195 basis points. What did I tell you guys? I told you back half of 2024, we're going to see margins go up, revenue go up, right? And profitability go up. And it's exactly what we're seeing play out. I nailed it to a T on this like a year ago. Exactly what I thought would play out. Oh, and I also told you back half of 2024, Cybertruck's going to get to profitability. What did they say on that conference call, right? Absolutely insane. Operating expenses down 6% year over year for the company. Income from operations up 54% for the company. I mean, at the end of the day, if your gross profit's up 20% and your operating expenses drop 6%, your income from operations is going to go to the moon. And that's exactly what happened. Income from operations up 54%. And remember, this is on a 2% up automotive revenues. Imagine if automotive revenues go 20, 30% up. What's going to happen to that income from operations? Ridiculous. Ridiculous. Operating margin was up 323 basis points. Adjusted EBITDA up 24%. Adjusted EBITDA margin up 243 basis points. Net income attributable to common shareholders on a GAAP basis, generally accepted accounting principles, up 17%. You know, bears love those GAAP numbers because you can't cheat those, right? Got to do it the way it's supposed to be done. 17%. What you got to say about that? EPS on a GAAP basis, up 17% on a diluted basis. These are incredible numbers, but that's just a start. This is where it gets flip your flapjacks. Insane. Net cash provided by operating activities, up 89% to $6.2 billion from $3.3 billion in the same quarter last year. CapEx, they obviously increased that massively. $3.5 billion in CapEx, which is by far and away a record. I mean, think about that. CapEx $3.5 billion? You can't outspend these guys. They're on a whole different level. Imagine trying to be any other auto manufacturer and trying to increase your CapEx $3.5 billion on a quarter in a quarter. Spending $3.5 billion CapEx in a quarter? These other guys couldn't even imagine spending money like that. That's ridiculous, right? That was up 43% on a year-over-year basis. They're spending ridiculous numbers, which is going to give them even a bigger lead over the long term, right? They won at this point. Free cash flow, $2.7 billion versus $848 million in the same quarter last year. So they increased their free cash flow 223%, despite CapEx being $3.5 billion in the quarter, by far and away a record amount. That's insane. Absolutely insane. Cash equivalents, and investments was up 29% for the company on a year-over-year basis. I mean, like I said, even if you're a bear, even if you're a short seller on the stock, even if you hate Elon Musk and hate Tesla and you don't want to see him succeed, even you have to look at these numbers and be like, damn, like that's pretty impressive. Like, oh man, they're actually, what am I going to say about that, right? Total production up 9%. That's obviously what we need to see. That's massive for the company. Now, what I thought was important here was right here. Storage deployed up 75% year over year. Tesla locations up 16%. Mobile service fleet up 5%. Supercharger stations up 20%. And supercharger connections up 22%. Tesla could start making bank off the supercharger network if these other companies could ever learn how to sell EVs. If they ever learn how to sell EVs, these other guys, Tesla's going to start making bank off superchargers, because basically all these other EV makers are now all adopting Tesla's technology in relation to supercharging, and they're going to be allowed to use Tesla superchargers, right? And that's supposed to roll out in a major way in 25 and 26. But the problem is these other guys have trouble selling EVs, right? As we see, Tesla's 3 for 3, the top selling 3 EVs in North America. Now, cumulative miles driven with full self-driving supervised has gone up a tremendous amount, and this is in the billions, right? Version 12 here, FSD is obviously just compiling a ridiculous amount of miles, which is going to help the systems learn faster and faster and faster, so they can become as perfect as they can potentially become, right? Now, future planned capacity. When it comes to Tesla's AI training capacity, they're expected to take that up and ramp that quite a bit more, which means essentially more spending with Nvidia here in the short term. I don't know what they're planning on doing in 2025 as far as CapEx goes. They kind of left this flatlined here, so we don't know what to expect in regards to that, but that is what it is for now. Energy and services and other gross profit is booming for the company by far and away record highs, close to $1 billion in energy services and other gross profit, which is, that's where it's really at, in my opinion, in regards to the long-term profitability cycle for this company, right? Autos are cool, but the big profit dollars are really going to be from all the services that this company does, right, in the energy business. Energy storage deployments has been booming for the company, obviously down from on a quarter-over-quarter basis, on a sequential basis, but up massively on a year-over-year basis here when it comes to gigawatt hours there. Now, additionally, as far as the outlook goes for the company, our company is currently between two major growth waves. The first one began with global expansion of Model 3 and Y platform, and we believe the next one will be initiated by advances in autonomy and the introduction of new products, including those built on our next generation vehicle platform. Despite ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Energy storage deployments are expected to more than double year over year in 2024. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we manage the business such that we maintain a strong balance sheet during uncertain periods. While we continue to execute on our innovations to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. These vehicles will utilize aspects of the new next-generation platform, as well as aspects from our current platforms, and we will be able to be produced on the same manufacturing lines as the current vehicle lineup. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in more CapEx efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity to close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Interesting, okay? Now, this shows you that we're still early innings in regards to this game. What you're looking at here is a graph, electric vehicle adoption rate, right? And obviously, China's beating everybody to the punch in regards to adopting EVs. But the rest of the world, we're kind of a little bit slower moving here, right? And I would say we're in like inning 3 of 9 in regards to this game of EV adoption, right? The first adoption cycle was really those very early days, folks. Think about the prior to 2019, folks, right? So think about 2018 and before. That was like the very early people, like the most forward-looking people really getting EVs. Then we had the 2019 to 2024 phase, which was kind of the next level of growth there, right? That was inning 2. This next, 3 to 5 years here we're going into is going to be inning number 3. And this is going to get us up to probably like 10, 15%. Type market shares, right? And then inning 4 and inning 5 are going to be insane in terms of, adoption there. And we're going to end up flipping the vehicle market to being more EV heavy than internal combustion engine heavy, which is going to be like just mind blowing to think about that, right? Estimated life cycle emissions of gas cars versus robotaxi. Obviously, it shows gas cars over time versus robotaxi, and it's not even close as we would expect, right? Now, the under $30,000 vehicle, there's so many different thoughts on what this vehicle is going to be. Is it going to be a stripped-down Model 3? Like, what's going to be here? I honestly think, my opinion is, I think it's that car. The difference is the car they showed off did not have a steering wheel. It did not have pedals, right? I think it's that car. Like, that's just my thought process. I just really think, like, that's going to be the car or something very similar to that. That's my thought here. Maybe I'm wrong on that, and that's fine. But my thought is it's going to be this car, just with the steering wheel and pedals. So we'll see. We'll see what it is. I don't know, but that's kind of my thought process there, right? Additionally, they showed this picture here, which I think is awesome. I love seeing these pictures of the factories getting built out, right? This is a semi factory. We forget all about the semi, right? I mean, gosh, have you ever driven on an interstate and see all the semis going by you all the time? Well, you're probably going by the semis, right? They don't go too fast. Unless you got a Tesla semi, then you go very fast, right? The semi-factory, we forget all about this. Well, Elon sounded extremely bullish on demand for this, right? I mean, he basically just talks about like demand, like it's going to be never ending in regards to semi over the next 10, 20 years, which honestly I think is going to end up being the wave. Especially, imagine when gas prices had their next big bullish run. Like I'm sure eventually oil is going to run to $100, $200 a barrel. That's going to eventually happen. I don't know if it's next year, a few years from now or whatever, but eventually oil is going to run again, right? And all of a sudden people are going to be paying $6, $7, $8 a gallon in different markets, right? And if you drive a semi, I think that's going to be the time period that a lot of folks are going to be changing their mind. And that will be during a time period where semi's ramping at that time. So all of a sudden you're going to start to see more videos out there. You're going to have to get more people educated on the semi. And I think that's going to be the point where a lot of these big fleets start to move over to EV. And really Tesla's the only one that's positioned for this, right? Nikola was supposed to try to do this, but we know that whole company's been a mess. Now, if you look at the balance sheet here, very important. Check this out. Cash and cash equivalents and investments up to over $33 billion here. Total stockholder equity is near $70 billion for the company now, by far and away an all-time high for Tesla. Incredible. They now, not only do they have the strongest balance sheet by a mile, in my opinion, in the automotive industry, but additionally, they're starting to build out such a strong balance sheet that you're going to start to be able to compare them versus their big peer tech companies, Meta, Google, Microsoft, those sorts of companies that have these incredible balance sheets. Nvidia, that you're like, oh my gosh, these balance sheets are ridiculous. Like these is like fortress level balance sheets. Honestly, Tesla's on their way to getting there. Give them another year or two, and they'll be in the same sentence as Meta, Google, Microsoft, Apple, as these big dog companies. Give them a year or two, and they're going to be there. Just start running the numbers, and you're like, dang, like they're actually going to get there. Like that's crazy to think, right? Now, part 3. What do we do with the stock now at this point in time, right? What do we do? So, first thing is, like I told you guys recently, don't even think about shorting the stock. Don't think about buying put options. Hell no, stay away from that. There was a great time period to play that. I made some great money on put options on Tesla, right? There was a time period you had there. That time period's gone now. The time period to do that was when everything for Tesla seemed like it was just getting worse. Revenues were downtrending, margins were downtrending, profits were downtrending. There was not a lot of excitement about the future and where are the new products and services and things like that, right? There was an opportune time to either short Tesla or buy puts, right? And if you did that during that time, you made a lot of money. That ship has sailed. It's long gone at this point in time. I would not want to be short the stock. I would not want to have puts. Oh, heck no. And the reason being is Tesla now, revenues are trending back up, margins are trending back up, and they're trending back up faster than a lot of folks anticipated, right? Profits are trending back up, and the future is trending back up. People are actually excited about the future and Optimus robot and autonomous taxi network and all those sorts of things, and the next generation affordable vehicle that's going to be under 30K. Like now we can start to see all this playing out here over the next 2 or 3 years. And so that's very, very exciting. So to short the stock or buy puts, you're late. You're way late to the game. You know, you should have been here 6, 9, 12 months ago, a year ago, like back in 2022. Like that was your time. Now is not your time, okay? So that first thing is heck no. Hold, yes, absolutely. Like it's worth a hold now at this point in time. If you own shares, there's no reason to sell this stock. There's none. What do you have to go off of, right? You say, well, what if you know, the election goes a certain way, or people are going to take away the EV credits and all these sorts of things. He's really helped that side out significantly, right? And so I don't know if they'll turn their back on Elon. It's a potential, but I don't see it actually being a super high potential now at this point in time. And additionally, we know if the other side wins, we know they're all for EVs and sustainable energy and solar and all those sorts of things. So I don't think there's much risk there. So given that everything's trending up the way you'd want it to trend up now, right? Deliveries are back up, production's back up. Like there's no reason to be like, oh gosh, I got to get out of Tesla now anymore, right? It was different a while back, but it's all changed for the better. No, what about buying the stock? So I think it's a buy, yes, if you don't have a position built, or your position's like a very small position, you're like, I got to build this out a lot bigger, I don't own enough shares, right? But in order to buy it, you have to believe in the EV revolution. Like you have to believe that EVs are not just going to be this niche category forever and ever. You have to believe that over the next decade, like we're moving heavy EV. And when I say heavy EV, I'm talking about like, you know, all new vehicles eventually are going to be EV. All of that. If you believe that, then you can believe in Tesla. Additionally, you have to believe in a robo-taxi future, where cars are driving us around, picking us up, and there's no driver inside. If you can believe in those two things over this next decade, Tesla's a buy. If you can't believe in those two things and you think EVs are always going to be a niche market and robo-taxis is never going to be a thing that takes off, then it doesn't make sense to buy the stock, right? So it really depends on where you're at there. Let's run some projections here, and I want to show you some eye-opening things in regards to Tesla, right? So I ran some projections here on Tesla, just some numbers for fun and just kind of playing around with some things, right? Now, I ran them at a 25% revenue growth number. That number might be low. Remember, Elon's expecting the company to get to 20 to 30% vehicle delivery growth in 2025, right? But then they obviously have the insane services growth, which just grew this last quarter, 29%, and they have energy growth, which is over 50%. So, 25% revenue growth on average over these coming years, I don't think that's crazy at all. I think that's probably very base level, I would call that, right? Net income growth should far outstrip the revenue growth. And the reason being is they're going to go services heavy. It's going to become a bigger part of the business, energy, and additionally software, right? And kind of recurring revenue streams, robo-taxi, things like that are higher margin. So net income growth should far outstrip the revenue growth of this company. So I had them doing about a 40% number on that line. Now, what's very interesting about that is you get to a compounding annual growth rate because if you're growing 25% top line, 40% bottom line, for Tesla, they're going to easily command a 50 to 70p, and it's not even close, right? But the interesting thing is that produces a compounding annual growth rate of 17% on the low end for 2028 and 28% on the high end, right? But keep in mind, net income margins are of 11% here. That's embarrassingly bad for tech. Remember, Tesla over the next 10 years is going to move much more to being I would call it a more tech-related company in terms of their margin profile than a traditional automaker, right? A lot of people look at Tesla right now and they just think automaker, but Tesla's margin profile and profitability profile is going to go much heavier to tech companies. You got to keep in mind their other big tech peers are at net income margins of like 30% plus. 25% plus, like it's very common. So Tesla being at 11% is really bad come 2028. That's what I think is very interesting. So I said, let's ramp it up here a little bit. Let's go net income margins to about 14%, which once again is still insanely low. Remember, their peers are at 25 to 50%-ish type net income margins, right? Even if you run up to 50% net income a year over the from 2025 to 2028, and you go to net 14% net income margins, which is still insanely low, now you're at a 26% compounding annual growth rate on the low end and 37% on the high end, right? Now, if you're growing net income on average 50% a year, you should command, honestly, way bigger than a 50 to 70p ratio range, but I just think that's kind of worth mentioning there, right? I said, let's run it up even more. Keep in mind, all their big tech peers are over 20% net income margins other than Amazon, right? So I ran them to 18% net income margins, which in order to do that, they're going to have 60% growth on the bottom line, which is still insanely low versus many of their tech peers. That puts them at a compounding annual growth rate of 34% on the low end and 46% on the high end, right? That's pretty incredible to think, right? Now, I wanted to show you here on 1000xstocks.com, I want to show you the compare feature. I want to show you Apple, Meta, and Nvidia, right? And keep in mind, Apple and Nvidia both sell hardware. They also are software kind of related plays as well, right? Nvidia with their CUDA software, and then Apple obviously with their iOS software, right? And they make, software revenue. Nvidia is still very early days in their software revenue. Apple's much further along in the game because they get their 30% IMOB cut, right? But additionally here, you look at gross margins of these companies, 46, 81, 75, but look at the net margins, 25% for Apple, 34% for Meta, 55% for Nvidia. So I think the important thing to understand here is Tesla's likely got a long way to run in regards to net income margins over this next 10, 20 years. As they go more and more into software, services revenue, it's going to be incredible what happens to that margin profile of a company, right? And keep in mind, you could be dealing with Tesla here, a company that I think Tesla is going to be a top 3 biggest revenue company in the world. There's only 2 companies that I can see, like if we fast forward 10 years in the future, there's only 2 companies I see having bigger revenue than Tesla 10 years from now. One is Amazon. Amazon, I think, is going to be by far and away the biggest revenue company by a long way if we fast forward 10 years in the future. And I don't think it's even going to be close. Like Amazon by that time is going to be in several $trillion of revenue. It's going to be ridiculous, right? The second company I think is going to be Walmart. So I think it's going to be, Amazon's going to be by far and away the biggest revenue company, and then Walmart. And then the third, I believe, is going to be Tesla, right? Because you look at Tesla, remember, Tesla's still a niche automaker. They're a niche automaker doing like $100 billion, if not more than $100 billion of revenue. A niche automaker. Imagine when they're a big dog 10 years from now. They're going to be putting up crazy numbers. You know how many new products and services they're going to have coming out over the next decade? This is Tesla we're talking about, one of the most incredible engineering teams in the world with Elon Musk, who always has to do something new and something new and something new, right? Gosh, that's going to be ridiculous, right? So the interesting thing is when Tesla gets those like 20%, 30% net income margins, you're going to start to think, what's a company's revenue going to be? Are they going to be doing $1 trillion of revenue at that time? Well, if suddenly you have $1 trillion of revenue, right, and you're doing a net income margin of 20%, do the math on that. That's $200 billion of net income per year. If you're talking about $200 billion in net income, and you got a company like Tesla that always has major growth, I mean, you're easily commanding a $5 to $10 trillion market cap on that company, easily. Like that's no problem at all. It just depends on what type of PE you want to throw on the stock at that particular time. If you talk about they get to like a 30% net income margin on $1 trillion of revenue, okay, now we're talking about $300 billion a year in net income. That's so much money, I don't even know if Tesla is going to know what to do with all the dang money. You can't even invest it fast enough. Like, it's just ridiculous, right? And then you're talking about a Tesla that's probably valued at 10 trillion or tens of trillions of dollars at that point in time. So you can begin to understand between the revenue opportunity here and then the margin opportunity here, how big Tesla can be over the future years, right? There's certainly no guarantee, but it's pretty darn exciting. Now it leads us into recession talk. What happens if there's a recession? I gotta say, Tesla sets up very dang well for whenever the unemployment recession happens. I don't know if that's 25, 26, 27, 28, whatever year that comes in. And then we eventually will have the unemployment recession, right? Tesla sets up very well for that unemployment recession because they're going with the most affordable price points, right? They're taking an ELF-like a strategy. What makes ELF so special? And what's been another game-changing stock for me, even a better percentage gainer for me than Tesla. What made ELF so special? The best quality products at the cheapest prices. What is Tesla doing? The best quality products at the cheapest prices. That's where Tesla's going, right? That's what they're doing. And so therefore you set up well in high inflationary times, recessionary times, everything like that, which is incredible. And so I actually feel comfortable. Like if you told me 2 years from now there's going to be a major unemployment recession, I feel comfortable being in Tesla. I think Tesla would grow even in that, which is pretty nuts to think, man. That is pretty darn nuts to think, okay? Hope you guys enjoyed today's video. I appreciate y'all joining me as always. If you want access to my premium library of courses, including Become Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, if you want access to my private group's Discord chat, if you're looking to level up your knowledge in regards to investing in the market, get up to a much higher level, pin comment down there, you can click on that. Apply to join us in there. You also get access to my Discord chat, which has a massive amount of 6-figure, 7-figure, 8-figure investors in there, including our Tesla community, which is really second to none. Our Tesla community in the private group is unbelievable. Our Palantir community is unbelievable in there. Our SoFi community is unbelievable in there. Unbelievably strong communities, okay? All right, guys, appreciate you joining me. Much love and have a great day.